Welcome back to the Wall Street Podcast. Today we're doing a deep dive into the Wall Street Journal Weekend Edition, specifically looking at August 9th and 10th, 2025.
Right. We'll be pulling out the key economic, financial, business developments.
Focusing on some critical shifts, federal policy, global supply chains, and what's happening with consumers.
Exactly. Our analysis really shows how these high-level policy decisions filter down, shaping markets.
Yeah.
And also the big realignments in manufacturing globally, plus these interesting changes in consumer habits.
Okay, let's start with federal policy. Big news here. President Trump has nominated Stephen Miron to the Federal Reserve Board.
He's the current White House CEA head, Council of Economic Advisors.
And Miron has, openly questioned the Fed's institutional legitimacy. That's quite a statement.
It is. He argues that central bankers' decisions often aren't purely economic, that they're, politically motivated frequently.
So this nomination isn't just filling a seat, it's challenging the Fed's traditional apolitical image.
Precisely. And what's really key is his stance on tariffs being positive, economically positive, and that inflation isn't a worry because of tax cuts and deregulation.
Which suggests monetary policy might start aligning more with political goals.
That's the potential implication, yes. It really brings up the question of what his stance means for future policy decisions. We should probably anticipate more political influence on rates, on trade policy.
A move away from purely objective economic analysis, maybe.
Potentially. Aligning more with the administration's broader view.
Okay, sticking with federal policy, but shifting gears.
Yeah.
Housing. The administration is planning a Fannie Mae and Freddie Mac stock offering.
Yes, aiming to raise about $30 billion is the estimate.
But analysts are stressing something important here.
They are. The need for that implicit government guarantee. Basically, the market belief that the government would step in if needed.
And that's crucial for the 30-year fixed-rate mortgage.
Absolutely crucial. Without that perceived safety net, the whole mortgage market could get unstable. Long-term loans might become much more expensive.
So a potential shakeup for homeownership if that guarantee weakens.
It's foundational, really. A big what if.
Okay, moving from macro policy to global tech and supply chains, we're seeing big moves, Apple expanding iPhone assembly in India.
Right. $17 billion in exports cited, clearly looking to diversify away from China. Regulatory challenges are a factor there.
And at the same time,
you have Robin Zeng's CATL, the huge EV battery maker, thriving, largely due to Chinese state support, building up industries to compete with the U.S.
So two sides of a coin, diversification and national competition.
Exactly. And it's underlined by Trump calling for Intel CEO Lip-Bu Tan's resignation over China ties. It all points to this global push for supply chain resilience driven by geopolitics and national self-sufficiency goals.
A new era of industrial policy, maybe?
It looks that way. It's about strategic positioning and national economic security now.
Let's turn to the consumer sector. Some interesting divergent trends in so-called vice stocks.
Altria, for instance, with its nicotine pouches, Dorn and Zyn, their stock is up 23% year-to-date. Shows real growth in smoke-free options.
But on the flip side?
On the flip side, Molson Coors is down 12%. Beer sales seem hit by, macroeconomic pressures on lower-income consumers.
And aluminum tariffs playing a role, too.
Yes, those import taxes increase production costs, squeeze margins, and likely push prices up for consumers who are already feeling pinched.
Interesting. And then there's non-alcoholic beer.
Right. AB InBev's non-alcoholic revenues surged 33%. It highlights this broader consumer shift towards alternatives.
So how are companies adapting? What does this tell us?
Well, the growth in pouches and non-alcoholic drinks clearly shows consumers moving towards alternatives, whether it's health perception, lifestyle. Companies have to innovate. They need new growth areas as the market changes.
It forces innovation, really.
Exactly.
So pulling this all together, these aren't just abstract reports. They touch daily life.
Absolutely. Changes to mortgage affordability, the products available to you, even debates about data privacy with AI. It's all connected.
So as you think about your own finances, maybe refinancing or investment choices.
Remember these shifts. Government policy, global trade dynamics, consumer tastes. They're actively shaping the landscape right now.
It's this constant interplay. Policy, global economics, consumer behavior, all reshaping things in real time.
So perhaps consider how these big movements might directly influence your own economic decisions, from your home loan right down to what you pick off the shelf.